Our guest today, Kevin O'Leary, chairman of iShares, of O-Shares, ETF Edge Shark Tank co-host, and Jim Lowell, CIO of Advisor Investments and Fidelity Investments editor-in-chief. And of course, I'm Bob Pisani. Jim, biotech, a big leader today. Biotech ETF, that's IBB, up over 2%. We've got some deal news. We have the president taking Regeneron Pharmaceuticals' experimental antibody drug cocktail, highest level for the IBB since July.
Overall market definitely enjoying a relief rally on better, I suppose, expected news relative to the president's health. And of course, you targeted at BBH and other ETFs focused on the biotechnology sector, clearly benefiting from that tailwind as well. Anytime you can see the leader of the free world recovering a little bit better than expected on news of some sort of biotechnology intervention, it's going to be good for the sector.
Yeah, and Kevin, you've got to be a happy man this year. Your O-Shares Internet Giants ETF, that's the symbol OGIG. It's been a monster this year, up about 70%. Shares outstanding have tripled. You've seen huge inflows into this fund, but you got to admit you're owning all the right stuff in this fund. You've got the Amazon, you've got Alibaba, Tencent, Alphabet, Facebook. What could go wrong at this point, if anything?
Well, you know, Bob, I think we're only in the third inning of this digitization because it's not just U.S. domestic FANGs. This index encompasses the entire globe, and the trend remains intact everywhere. Whether you're China, Europe, South America, everybody is moving to the digital pivot, direct to consumer, and that's not going to change. And the reason that I got involved in this index is those are the companies that I write huge checks to actually digitize my company. So I'm trying to get some back, if you know what I mean.
Yeah, I think the important thing, Kevin, is you've hit all the right stocks this year. You've got another great ETF out there, the dividend ETF, OUSA, hasn't done as well, but Procter & Gamble, et cetera, also very good names to own at this point. Any idea when dividend payers might start outperforming?
Well, you know, it's interesting, Bob, because it's almost 5 years to the day when you interviewed me about this when I listed it on the New York Stock Exchange. And it's done exactly what it's supposed to. This is my largest core holding. This is a very conservative fund that's a dividend strategy. And the thing you have to think about today for dividend strategies is quality of the balance sheet. You can get a 10% dividend on an energy stock right now, but I'd argue that's very dangerous. And we don't own things like that. We care about what is sustainable, because this is a product that's designed to be a core holding for people that are trying to distribute 5 or 6 or 7% a year from their trust, their fund, their pension, their sovereign wealth fund, whatever it is. Yep. And I think the quality balance sheet is what matters, and that's what's inside. This is basically the S&P 500 less all the stuff you don't want to own. It's about 100 stocks that are the best quality in the S&P. So OUSA has been around a while, and I'd stack it up against any dividend strategy. But thanks for the call out, because I built it with you.
Yeah, thank you. Appreciate that. Thank you, Jim and Kevin.